Welcome to Shadow of Truth, and today is Thursday, April the 20th, 2017, and your hosts are Rory Hall from thedailycoin.org and Dave Kranzler from investmentresearchdynamics.com. Dave, what's going on?
Well, that's a good question. Someone's trying to tell me that they've been manipulating the gold market this week. So I think that's something we should talk about.
Well, we should at least look at it anyway.
Yeah, I mean, it sounds like a gall darn conspiracy theory to me, but let's talk about it and see what we come up with.
All right, sounds good. And these guys have just been, I looked up earlier this morning. It's like, my God, there's another waterfall on the screen. Couldn't hardly believe it.
Yeah, this morning's wasn't quite as bad. I kind of had a feeling this was going to happen, and I even said to my fund partner, "Look, we gotta cut down our positions here. We'll re-enter them." And but what was interesting is if you look at, well, first of all, the reason why I had a feeling this was going to happen is two reasons. One is if you study the Commitment Traders report, which I've been doing for probably the better part of about 14 years, you'll see that the net short position of the trading category that's associated with the bullion banks is at an extremely high net short position. And there's only been a couple times in the last 14 years that I've been watching it where the bullion banks were wrong in terms of how they were set up. And so I just had a feeling that they were going to slam the market, which then triggers hedge fund algos. The hedge funds are extremely net long in terms of the net between the long side and the short side. And so the hedge fund algos dump their long positions and it pushes the market down, and then the bullion banks cover their shorts and they make money. They're not making as much this time because the bulk of their short position was put on. I think it's getting harder for them to do this type of operation, is what I'm trying to say. And yes. For instance, on I believe it was Tuesday when they pushed the market down $12, they lost money on those shorts because the market bounced right back, and we almost never would have seen that historically. And I find that to be very interesting. And to me, it also points toward the idea here that there's potentially a physical shortage in London of bullion that can be delivered into China and India.
Okay.
But what was interesting about the timing of the smash is normally when they smash the market with paper, they do it right before the COMEX opens and then kind of during the COMEX trading day. Yeah. These smashes occurred Tuesday and yesterday occurred about half an hour, 45 minutes before the London PM fix. And if you recall, I think it was last week that on one of the London PM fixes, they fixed the price $12 below where the front month COMEX gold contract was trading.
Yeah, another so-called glitch.
Right. Some people refer that as the spot price, but it's not the spot price, and Kitco's not the spot price. It's basically you want to look at the front month COMEX futures price to gauge where the world price of gold is at any given time, except when they actually establish the London fix, and then that's the spot price.
Right.
But right, so they pushed the fix down $12, and the COMEX futures never even really responded that I can remember. They just sort of stayed $12 above where the fix was. So it was a rigged fix. It was completely dirty. Of course, there was no explanation for it coming from the LBMA officials. That's to be expected. And then suspiciously a week later, you get these paper hits about half an hour before the London PM fix. And what I think that indicates is that they're desperate to get the fixed price down as much as possible in London. And to me, I think it's because it points to a shortage of physical bullion. Now, a lot of these guys like Andrew Maguire have been talking about, shortages, and it gets to the point where you think they're crying wolf. Well, that's because there's so much fraud going on behind the scenes and so much manipulation of the market and hypothecation of gold, you don't really know all the pockets of where they can pull gold from in order to deliver it. Well, I think the way the market's trading right now and the way these attacks on the gold price are coming, to me, because it's coinciding with the London fix, it tells me there's probably, a real shortage here in London. And I think the source stems from the fact that I think demand bounced back in India a lot faster than these guys had anticipated. And China's demand is really strong right now. They are removing a lot of gold from the Shanghai Gold Exchange every month, and a lot of gold is getting delivered into it on a daily basis. And to compound that problem for these guys, Turkey in the last few months all of a sudden became a big buyer of gold. And the reason I know that is because this Brimlow report reports on the market premium in Turkey every night. And it's been trading at a premium for the first time in a long time. And part of the reason for the demand is that Erdogan over there, the Prime Minister Erdogan, or whatever they call him, president, gave a speech about a month ago when he told the public that they should be converting their Turkish currency and their dollars into gold. And
Really?
all of a sudden, yeah. So you're starting to see other traditional source. Same thing with Vietnam. The premiums in Vietnam that are being paid are on a relative scale very high on a historical basis, and it's an indication that there's a strong demand for physical gold over there amongst the population. So, not only are India and China buying gold hand over fist right now, you've got some other sources that are also buying a lot of gold. And I think it's putting stress on London. And we've seen that, I've remarked on this show and in my blog, etc., that it seems like the price of gold, when it gets attacked, bounces back very quickly. And, again, to me, it's just a signal that there's a lot of stress coming, a lot of stress pushing the price of gold higher in the physical market.
Yeah, and the same thing is happening with the silver on the silver market as well, as we've discussed before. I mean, it takes more and more paper for them to get less and less of a response or a reaction that they're looking for. And like you pointed out a minute ago, Dave, they more than likely they did lose a lot of money on that glitch that happened last week. I mean, that was first of all, it was very underreported, and second, it was equal, in my opinion, it was equal to what had happened in January of 2016 when they had the 58 cent or 53 cents, whatever it was, divergence in the silver market, because these guys were just stealing, as we talked about, they were just stealing silver from whoever was bringing it to market during that time. And that's probably what happened with this gold glitch as well. I mean, $12 in gold, that's not a lot of divergence, but it's enough to create some space. And like you said, it didn't even affect what was going on with the spot price as far as it moving up or down or even reflecting that change or that divergence, I should say. So
Right. Well, see, here's the thing. I mean, the way the LBMA works is you get buyers and sellers of physical gold lined up on either side, and then the fixed price is supposed to balance out the supply and demand between the buyers and the sellers. And let's say that the buyers happen to be the bullion banks who need to buy physical gold to cover preordained commitments, whether it's via futures commitments or LBMA forward commitments. And let's say that they've committed at a higher price and they have to deliver that gold. Well, and let's just say the number that's going to clear, just for sake of example, is 10 tons of gold that day at the PM fix. Calculate out how many ounces 10 tons of gold is, and it's quite a bit. And if the bullion banks are going to lose money on a situation, if they can save $12 an ounce on 10 tons worth of gold, that's a lot of money.
It's a lot of money.
Right, and so it is. It's basically theft from the people, from the primarily producers who are trying to sell their physical gold on the LBMA. So I mean, the whole thing is just completely corrupt. I've said for many years that the gold market, gold and silver market are the most corrupt market I've ever seen.
And they have to be, because they're money. Gold and silver are money.
Real money.
Yes, and this fiat currency lie that we are dealt, that we have to deal with, that we're forced to deal with, as I've said for the last 2 or 3 years, once the currency or the money becomes corrupt, everything else has to become corrupt, and the starting point is gold and silver. So until those are no longer corrupted, then everything else will remain just one giant lie. And that's just the way it is, unfortunately.
Yep.
When I saw that waterfall, it's much more pronounced in silver today than in the gold market. It was just like, you got to be kidding me. And I mean, do you think that it has something to do with any of the moving averages, the 200-day moving average or the 200-week moving average or any of that? Or is it just criminal activity? I
Well,
look
it's
at it and it's
criminal.
just,
I mean, yeah. I mean, the hedge fund algos are pre-programmed with sell stops
right.
or with stop loss orders in there, and they're keyed off of moving averages and pivots and whatever other fancy PhD calculations that they put in their own algorithms to try and differentiate their technical algorithms from all the other hedge funds. They're basically all about the same, though. And that's why you see these waterfall falls. I mean, it's not, the thing is, like when Zero Hedge reports it, they'll be like, oh, $5 billion worth of gold, one seller. Well, no, it's not one seller. What it is you'll get a bullion bank that'll go in and drop a payload of paper contracts and push the market lower. And then that triggers the sell programs in the hedge fund computers. And so probably 3/4 of the selling is hedge fund dumping.
And they're just
Half to
scraping,
3/4 of it.
and the bullion banks are scraping those profits.
Or cutting their losses, as it were. And which is what I think the case was on Tuesday, because it bounced back so quickly.
Yeah, silver never recovered.
Yesterday and today, yeah, they're probably booking some profits on their shorts because they were, But again, they're not having much luck pushing the market below the high 1270s.
As far as gold, yeah, I mean I don't think that they're getting the reaction that they're looking for, because, like I said, I think they're looking for something in the low 1200s. A good $50+ beat down, and they aren't getting it. They're getting,
dude, they'd take gold to 1,000 if they could, but they can't.
Right. Well, that would blow the market apart at this point.
I wonder if that Goldman rocket scientist analyst who originally a couple years ago was saying gold was going down to 800, he's a commodities analyst.
He's on the Trump team.
I wonder what his target price is right now.
Didn't Trump put him on the Treasury Department also?
No, not the guy who does the commodity strategist at Goldman. Okay, he might have. Trump has a lot of Goldman people in his administration.
I mean, that's why I was asking. It's like, why would
I'm starting to call him Hillary Trump now, because most of his policies have pivoted back to the platform Hillary Clinton was running on. Bomb the hell out of the rest of the world, let the deep state run everything, and let Wall Street do what they want to do.
And I'll be playing golf. Y'all take care. I got another round of golf booked. So,
well, I don't care about that, because the president's not in charge anyway, and hasn't been for many years. But at least if you're gonna represent yourself to be something, at least stick to what you represented yourself when you attracted all these votes. Now the people who voted for Trump as a way to vote against Hillary have ended up with Hillary.
Yep. What a freaking
Well, the
disaster.
bottom line here is if my theory about what's going on in the gold market is correct, I expect a little more downside in this operation. I mean, when they start, I've called it the commitment of traders open interest liquidation operation, because the open interest gets built up pretty high. The hedge funds they get way over their skis on the long side, and the bullion banks are holding all the cards in terms of the ability to manipulate the market, and on a short-term basis dictate the direction of the market. And what usually happens is you'll get an initial downdraft, which we've had. It hasn't been a very big downdraft, and I think they're going to work on trying to engineer a bigger downdraft next week. Now, I could be wrong, who knows? But for me, the formula that's always worked is to just, again, I don't fully trust the commitment of trader numbers that are reported, because the numbers are coming from the banks. But they are showing a large net short position as of the last commitment of traders report. I'll be interested to see the one tomorrow. That'll be through the end of day Tuesday. And if it looks like they're starting to reduce their net short position, then we probably have another week or two of sideways to down. And then I think we're going to get another big surprise move up, because I think by then it's going to become apparent that the Fed's not going to be raising rates anymore. And if they do, at some point, they're going to have to come back with another big money printing program. And gold will go ballistic on that. And in addition, you still have Trump wants a weaker dollar. So even though they come out and they say they're happy with the dollar where it is, that's not true.
Yeah, I'm going to stick with what I've said for the past month or so. QE is on the table. That it's coming. Don't know when, but I personally believe it's going to happen. I mean, they're going to have to do something. They got to do something. You've got China and Russia over here doing their thing, conducting business the way that they have been for the past couple of decades, and just continuing to take another step to eliminate the dollar from the world reserve currency, get it out of the system completely, and they just keep pushing their programs forward every day, another step, every day, another step, and just like what Jeff Brown, in that interview that I conducted with him recently, they've got the One Belt, One Road summit coming up at the beginning of May, and that's one that, as that continues to unfold, it's going to continue to have an impact on the global economy. And with all of these new gold markets that are opening up in the East, gold and silver are going to continue to flow that way. I think we may wind up being completely isolated.
Probably.
Well, Dave, where do we go from here?
I'm going to go back to sleep. I'm tired.
Well, all right.
Actually, I got to finish up the latest issue of the Mining Stock Journal that'll be released tonight to the subscribers. Got a great new idea in there.
Oh, yeah, we were supposed to talk about that Monday, and we didn't.
Yeah, well, there we go. We just talked about
it. Oh, well, go get busy with that, and I guess we'll pick it up on Monday and see where we stand.
Sounds good. Have a good weekend.
You too.